Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 15th of February. It's probably been a slightly stronger week for US stocks rather than the UK this week. Obviously, there are still hopes surrounding the proposed $1.9 trillion package from the President. At the same time, technology stocks have also continued their tear. We've had some good updates from the likes of Twitter. And of course, not only does the Nasdaq benefit from that, but also the S&P 500, where there's a preponderance of tech stocks as well. In terms of the UK, we've got some UK GDP numbers. 1% growth for the fourth quarter, which meant that we avoid a double-dip recession, although 9.9% down for the year as a whole, and the likelihood that the first quarter of 2021, because of the lockdown, will also be in negative territory. Hopes remain, of course, for recovery later in the year. So, in the year to date, we have the Dow Jones up 2.7%, S&P 500 up 4.3%, Nasdaq up 8.8%, and the FTSE 100 up just 0.8%. Turning to next week, undoubtedly the highlight is the start of the full year reporting season for UK banks. It's going to get kicked off by Barclays, which despite being down 19% over the last year, is the preferred play in the sector. And we're also going to get full year numbers from NatWest, down about 25% over the last year or so. Banks have had something of a bounce since the first vaccine was announced back in early November. But a couple of things in particular to look out for is, number one, whether the UK follows the US lead, as we saw in their reporting season a few weeks back, of releasing some of the bad debt provisions they had previously made. That could be a positive if that happens. And the other thing, of course, is dividends. It is likely that after the regulator has lifted the shackles, we'll see a return to dividends for most of the banks who are all going to be reporting over the next couple of weeks. Finally, full year numbers also due from British American Tobacco. Shares have struggled also, down about 21% over the last year. There is a dividend yield underpinning that of getting on for 8%, which is fairly punchy. And BAT did also recently upgrade their full year profit forecast. So we'll see whether that comes through. That will be driven by a new category products such as vaping, for example. On the downside, of course, look out for the net debt figure. That's quite high at the moment, while for the sector as a whole, litigation and regulation are a constant overhang. Thank you for watching. Have a great week.